I think the actual level of 500,000 barrels per day probably isn't a bad number. Our view of the market next year was that it's slightly oversupplied if they stay where they are. So 500 probably would be enough. The big question is, can they deliver? Can they get people like Iraq and Nigeria to sustain and indeed achieve compliance? Are the Russians going to play ball? Are the Saudis going to get frustrated over non-compliance from some of those members? A lot of questions still to be answered.
Absolutely, and the talk is at the moment that this is going to be fulfilled 2/3 OPEC, 1/3 non-OPEC. Does that make sense to you?
I've heard that number. I don't think it's been confirmed, but yes, you would probably expect that that OPEC producers would bear the bulk of that burden. And it may well be that the Saudis and the other Gulf producers have said, look, if you guys play ball with us, we'll shoulder the bulk of that burden.
So if we see 500,000 barrels of oil coming off the market, at least until the first quarter of next year, it would deepen the cut out to 1.7 million barrels. What impact is this going to have on the oil market?
Yeah, I mean, I think if they actually achieve that, it's pretty supportive. Our view, contrary to some other analysts, is we didn't see the first quarter being the real problem for OPEC Plus. We thought second quarter, third quarter, the potential for surplus was rather greater. So we'll wait to see. It's all still to play for if they're going to revisit in March.
What are the fundamentals looking like, in your opinion, coming into 2020 and in 2021? Because some have said that OPEC is now going to have more of a market share problem in the future, particularly now that we've seen tight oil going from something like 5 million barrels in 2007 to 12 million barrels in 2019.
Yeah, no, and you know, even with slowing US supply growth over the next couple of years, which we think will happen, you know, OPEC's going to be chasing market share down if they want to sustain prices at or above $60 a barrel. So it's the eternal conundrum. They can have market share or they can have price. They can't have both.
Do you think tight oil continues to rise in 2020 and 2021?
We do. We have total US supply rising, but by a much slower rate than it has done over the last 2 to 3 years.
What about demand? How does that picture look, particularly given the uncertain economic fundamentals as well?
Well, you know, people's expectations for macro and for oil demand growth oscillate really on a daily basis with President Trump's views on the likelihood of a trade deal with China. So we think there's a little bit of a rebound in demand next year, which sort of helps get OPEC Plus out of jail. But, you know, if there's a steeper macro turn down and problems with global trade, then, you know, that may be an over-optimistic scenario.
Is that the Argus base case at this point? You expect a deterioration in fundamentals?
No, I mean, we think there's a little bit of a surplus potentially next year. We have demand actually accelerating slightly next year, partly because of IMO 2020 effects, normal seasonal weather as an assumption, and a slight improvement in global GDP. But we recognize that there are downside risks for that demand forecast.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.